So tonight we are going to be talking about relevant costing. Relevant costing. Now, every business, to every business, there is always a need to make a decision. There's always a need to make decision in every business. In every business. And for you to make a decision, in any business, cost is involved. Cost is involved. Or cost will definitely be involved in making a decision. In making a decision. So you can have various orders from customers as a business owner. But in making your quotation, there can be some errors in your quotation. Now, the errors in your quotation can be based on the fact that you are not recognizing the costs that are relevant to the order that you receive from your customer. You are not recognizing the specific cost that is associated with the order you receive. Because there can be some costs that might be in existence, but they are not relevant to the decision you want to take now. There are some costs you've incurred some years past, some costs you've incurred academically. But as far as the future is concerned, if you want to compute the cost, the relevant cost to writing ICAN exam, to write May Diet ICAN exam, the relevant cost associated with you writing May Diet 2026 exam is 1, your subscription. 2, the payment for exams. 3, maybe the cost of tutorials, the cost of data, and the rest. These are the relevant costs associated with May 2026 diet exams. Now, if you are now asked, what are the relevant costs associated with ICAN exams, May Diet 2026 ICAN exams, and you are now bringing the historical cost, the cost of how you registered for ICAN, paying 11,000, looking for a chartered accountant that would sign, all those costs are not relevant as far as today is concerned. What is relevant is how much are you paying for your exams now, your subscription, and the rest. So it will now narrow the costs down to what you need to get as at now. So in relevant cost, the issue of past costs are not being considered. Please take note. Past costs are not considered, and past costs are referred to as what? Sunk costs. They are referred to as sunk costs. So too many names for sunk cost. Too many names for sunk cost. So costs that have been incurred in the past are not relevant to future decision making. Though in a context, you might want to argue that yes, you cannot have today's cost without the historical cost. Yes, you can have that argument in another palace. Yes, but as far as this concept is concerned that we're looking at, we are saying that past costs are not relevant to future decision making. Based on this concept that we want to look at. Yes, they are not relevant. So when we talk about relevant cost means using only costs that will change because of a decision. The cost that will change because of a decision. In simple terms, we can say relevant cost is the extra cost or savings that will happen if a decision is taken. If a decision is taken. So when we talk about relevant costs encompass future cost. Relevant costs encompass incremental cost or extra cost. Relevant cost encompass opportunity cost. Opportunity. We are served with a question on relevant cost. There are three things you must always look out for. One is the future cost. Two is the incremental cost or extra cost. And three is the opportunity cost. If I have two options, which of these options will be best? Which of these sacrifice will be best? That is the opportunity cost. So as we move ahead, you see, just note these 3 points. Note them very well. You see how we're going to consider them as we look at question. Future cost, incremental or extra cost, opportunity cost, that is what you give up. Now, when you see some of these issues in a question, for example, past cost, such as sunk cost, this form of cost are to be ignored. They can include some cost in a question. It is not relevant. You ignore it. Instead of you putting a price value, you can just put 0 or dash because it is not relevant. It is not relevant. So another point you have to look out for is costs that won't change, costs that will remain constant. And what are those costs? Fixed costs. Fixed costs will not change. Either you take a decision or you don't take a decision, fixed costs will remain what? Will remain constant. So when you see fixed cost, fixed overhead in a question, and they are not telling you that is a specific fixed cost, that based on the fact that we want to take this decision, we need to incur additional fixed cost. If the question is just telling you that fixed cost is this, that fixed cost is not relevant. The only point where fixed cost will be relevant is where it is incremental in nature, where it is specific to the decision you want to take now. Maybe you have existing fixed cost of 20,000 naira, and because you want to take a decision to expand your capacity, you need to increase your fixed cost because of the decision you want to take now. That addition is what is relevant, not the whole fixed cost. Not the whole fixed cost. So costs that won't change. And what are those costs? They are fixed costs. They are not relevant to future decisions because they will remain same. Either you take the decision or you don't take that decision. So they are not relevant. You don't consider them in relevant costing. So costs such as overheads, fixed overhead, variable overhead that will not change. Take note, that will not change. They are not relevant unless what? Incremental in nature. Unless incremental in nature. So that is one thing we must look out for when solving questions on relevant costing. Yes, when solving questions on relevant costing. I've taken a look at the topic again. Yes, I have now come to a conclusion that is what everybody in this class should know. Yes, and that is my objective. That as far as you're in this class this evening, you should understand this and be comfortable with solving questions on relevant costing, because it does not need you to cram anything. Yes, it's just for you to understand the concept, then you will be fine. So now, I think it's important I speak to my slide before I move further. Now, decision making involves making a choice between two or more alternatives. That is, the decision will be rational or profit maximizing. All decisions will be made using relevant costs and revenues. So relevant costs are what? Future cash flows arising as a direct consequence of the decision under consideration. So relevant costs are costs that has to do with a decision that is in relation to the future, where the cost is not futuristic, it is not relevant. Where the cost is past, is sunk, it is not relevant. So there are three elements here. Cash flows. To evaluate a decision, actual cash flow should be considered. Non-cash items such as depreciation and interdivisional charges should be what? Should be ignored. So activities that does not involve movement of cash, notional transactions, implicit transactions should be ignored. Cash flows constitutes relevant cost. So future costs and revenues, this means that past costs and revenues are only useful insofar as they provide a guide to the future. So costs already spent, known as sunk costs, are what? Irrelevant for decision making. Differential costs and revenues, only those costs and revenues that alter as a result of a decision that is relevant. So where factors are common to all the alternatives being considered, they can be ignored. That is a case of what? Fixed cost. Because either you incur an expense or you want to produce or you don't produce, definitely that factor will be there. So you ignore fixed costs. The only difference are relevant. So in many short-term situations, the fixed costs remain constant for each of the alternatives being considered, and thus the marginal costing approach shows sales, marginal cost, and contribution is particularly appropriate. So let's take it further to the main thing. Now, relevant costs of materials. Please take note, in every question, you see issues of material, you see issue of labor, you see issues of fixed overhead or variable overhead. Now, this is where the work is. What are we going to do when we see issues of material? The statement will always come in similar way. So we can have material. You can have material in your warehouse. You can have a situation where you are short of material. So we have it as in stock, when you have material in your stock, and when you are out of stock, what will happen? So if a question says that material X is in regular use, material X is in regular use, how are we going to treat that? It means that because it is in relevant use, there will be costs associated with it. You can have historical costs in the question. You can have current value or current cost of the stock in the question. You can have the net realizable value in the question. But once you see a statement, material Y, material X is in regular use, the relevant cost of that stock, of that material, is the what? Is the current market value, the replacement value. The replacement value. Please take note. The replacement value. Once you see the statement, material X, material Y, material Z is in regular use, just know that the relevant cost associated with that material is the replacement value that The replacement value is the current market value. When you go to the market today to buy that product, how much will you pay for it? The price you're going to pay for it as of today is the relevant cost of that material. So in the question, you just look for the price as of today, the current market price. You multiply by the quantity of stock you need. That will give you the relevant cost for the total raw material you want to purchase. So material cost, where the material is in regular use, the relevant cost is what? Is the replacement cost. The relevant cost is the replacement cost. It means that you must replace it. So even when you have certain quantity in your stock, you will still solve by buying the quantity you need to meet with your customer's order. So that is one. So material in stock in regular use and will be replaced. The relevant cost is what? Current purchase price. Current purchase price. So where you have the material in stock and will not be replaced, what will happen? When you have the material in stock and will not be replaced, maybe the question is telling you that the material has no alternative use. Where the material has no alternative use, what will be the relevant cost? What will be the relevant cost? Now, in the question, they can tell you that material X is not having any alternative use, but if used for the production of product Z, it will result in a contribution of 25 naira. If not used, it can be given out as scrap for the sum of this. Now, when you have such scenarios in a question, you look at the opportunity cost. That, okay, if I don't use this material for this production, what are the other options? What are the other alternatives? Now, the other alternative that you are going to choose will be the best. So in terms of this statement, what we are looking at is what will you sacrifice? If material X is not having any alternative use, what sacrifice am I making? The sacrifice can be one, either you sell at the disposal value, that is the net realizable value. Net realizable value. So, or if it is being used in another aspect, what will be the contribution? So, where the material will not be replaced, the relevant cost will be equal to what? The opportunity cost, e.g., lost scrap value or lost contribution, if you use material here instead of elsewhere. So when you use the material for a particular decision, and you are going to be losing certain things by not using it in another aspect. What are those things you are losing? When you compare those things you are losing, the highest of the sacrifice will be the relevant cost. So where you have material in stock and has no alternative use, or you will not replace it, the relevant cost will be the highest value forgone. That is the opportunity cost. We're going to see an example in relation to this. Now, where you have a material and the material is out of stock, you don't have it at all, and it is very important for you to get the material. What will be the relevant cost? What will be the relevant cost? The relevant cost will be the purchase price, the current purchase price. The current purchase price. That is, when you go to the market today, how much will you get it? So material not in stock, but is required. It means that you must buy it. The fact that you must buy it, the relevant cost will be what? The purchase price. The purchase price. Please, hope you are getting this. Are we getting it, please? All right, fine. So let's take it further to, this is for material. In the case of material, these are scenarios where question can come in terms of material. In terms of labor, for labor, you can have a case of spare capacity. Oftentimes, I've asked what the meaning of spare capacity is. What the meaning of spare capacity is. When you have spare capacity, it means you have the workers in excess. You have the workers in excess. So when there is need for them, are you going to still pay them for engaging them? The answer is no. So when you have too much workers in excess, idle, and there is need for them to be engaged, the relevant cost will be zero because they're already fully engaged. You are paying them monthly salary. So based on that fact, they are idle and we need them. There is no cost we incur on them because they are already on fixed pay, on a fixed salary. So because fixed salary is a committed cost, and committed cost is a past cost. Committed cost is a form of sunk cost because you've already agreed based on the letter of appointment. This is how we're going to be paying you. You understand? So we'll pay you monthly. Either you have work to do or not. All you are expecting is when it is time for you to be settled, you get your money. So the issue of having spare capacity in an organization, the relevant cost is nil. Now, why are we bringing spare capacity to relevant costs? Sometimes the question can come that the organization need, let's say, 20 workers, and you already have 30 workers in existence. So the remaining 10 that you need, or let me say the organization need, yes, you need 20 workers, but only 10 are fully engaged. Only 10 are fully engaged. Because you have them in excess, the cost of bringing those extra hands into the job, into a particular function, will not cost you anything because you're already paying them monthly. But where you don't have them, the cost of getting extra hands, the cost of hiring more heads that you didn't plan for, that cost, that extra cost will be what? Will be a relevant cost. And that will come up where you have fully engaged those you have, those you employ. You now discover that for me to meet up with my customers' demand, I need to engage 5 more people. The cost of engaging that 5 more people, maybe just for that period, that cost will be relevant, cost. If you look at the slide, you see full capacity, where you can hire more labor, that is, take on extra staff or pay overtime. Now, in some situation, those who fully engage, the agreement is 8 to 5. But because of the demand at hand, you want them to work extra hour. The cost of labor for working extra hour is what? Is relevant cost. Is relevant cost because it is as a result of the demand that you want to meet up with that you are now working extra hour. So the cost of working extra hour is a relevant cost. Is a relevant cost. Is a relevant cost. The cost of hiring more workers to meet up with a particular decision is a relevant cost. But the cost of paying your full-time workers every month, every week, is not a relevant cost. is not a relevant cost. Please take note, is not a relevant cost. Now, where you can't hire more labor, where you can't hire more labor, where the circumstance does not warrant you to hire more labor, maybe the tax you want people to be engaging is a specialized tax that you need professionals to handle. At that point, what will be the relevant cost? What will be the relevant cost? It means you have some specialists working in Department A, but you need their service in Department C. Them not working in Department A, there will be some lost contribution. There will be some lost value in Department A because they are not there. Maybe there will be wastage of material. There will be more time that will be used. So what is that lost contribution? What is that lost contribution of them not working in Department A, but co-opting them in Department C? The lost contribution in Department A will be the relevant cost, plus the cost you are supposed to pay them in Department A. Please take notes because I've seen questions on this particular aspect. Yes, on this particular aspect. So the confusion in this aspect will be, why are we still paying them what we've agreed to pay them in Department A plus the lost contribution? Because the relevant cost in this case, where you are moving some of your workers from a particular department to another, the relevant cost would be the contribution you are supposed to get in Department A. But because these workers are not there, you are losing that contribution. That contribution plus the actual amount you're supposed to pay them will be the relevant cost in that scenario. Will be the relevant cost in that scenario. So this is one of the issue I discovered. Yes. Yes, what is the question?
Yes, sir. So I have a question on this last part that you explained now. So those workers now that are working in Department A, maybe they've already agreed a price that they want to pay them, like a fixed salary. So why are they now paying them when they now divert them to Department C? I thought it's only the lost contribution that is supposed to be relevant cost, since they have a particular amount they agreed as their salary. Hello, sir. Can you hear me?
Yes, I can hear you. You know, I like to mute you. Your device is always causing echo. That is why I don't want to speak whenever you are speaking. Yes. All right, Mr. Babajide, what is your question?
Okay, sir. Good evening. Thank you, sir. So now I want to ask now, in this case of lost contribution that will be added to the cost of labor, is it that that the lost contribution, is it that it is going to be paid to the workers, or it is just going to be charged to that contract? So to speak.
Okay, though your audio is not clear, but if I should get what you're saying, the lost contribution will the lost contribution will be the lost profit that these workers would have enabled Department A to achieve, but they are not achieving it because they are not there. So it will be given in the question that the contribution of Department A will be 20 naira. But because these people are not there, these 20 naira will not be achieved. So if you are not trying to look at the relevant cost of labor in that regard, will be the opportunity cost, the loss contribution in department A, plus any extra cost of labor that the departments C or B will incur. So the loss contribution in department A that cannot be achieved will be a relevant cost, because that loss is occurring because of the decision that is being taken. So when you have a fully employed labor, when you have full capacity of workers fully working, and you need some persons in another department, in another unit, there will always be an opportunity cost in relation to that particular decision. And the opportunity cost will be the lost contribution. The lost contribution is what department A is supposed to get, but they are not getting it. So the opportunity cost, the sacrifice department A will have to make, is a relevant cost to the decision of the overall organization. I don't know if that is clear.
Yes, sir. Yes, it's clear. So the question I asked was that, okay, now in this case, two different costs are going to be charged to
Yes.
the project.
Very well,
Now
sir.
the cost of hello.
Yes, I can hear you, sir.
Okay, so two different costs. One is the opportunity cost. Another one is the cost that is the amount that is to be paid to those workers that have been moved to the other department. So now, in practice, my question is now that in practice, is it that both costs charged are going to be paid to the workers, or is it just the cost of the particular job in question that they will be paid, and the opportunity cost is going to be paid to that department?
Okay, all right, I get your point now. Yes, in practice, the cost will be giving the actual cost of engaging the workers, and the lost contribution of the other departments will be factored in to determine the relevant cost. But this is the scenario I want to paint now. Now, the point is, why relevant cost? So that we'll get it right. Why relevant cost? The issue of relevant cost should be viewed from the perspective of the organization as a whole in trying to make decision. Yes, the relevant cost in that scenario, sir, will be the lost contribution, and the extra labor cost will be paid to the workers. Yes, and why are we coming up with that? We want to actually see if the overall cost of producing a product compared to other organizations is worthwhile. So why are we bringing up this? The essence of this concept is for you to know either to make a product or to buy. So you are trying to look at what will be the costs of producing this particular product to you. compared to buying it from other organizations, or comparing the costs to you, to your competitors. So the costs would be the lost contribution, because it's a value, plus the extra labor cost put together will give you the relevant cost in that scenario. I don't know if that is clear, sir.
Yes, sir. Thank you, sir.
Yes. So the essence of the cost is for us to know, sir, are we going to break even when we engage in producing this product? Because you have a target markup, a target profit that you want to achieve, comparing your cost with your revenue. Are you going to make profit? Are you going to go ahead with the decision you want to take? That is the essence of that. So now, going back to Madam Ineka's question. Now, the issue of paying your workers, engaging Department A workers in Department B or in another organization, because the question might not be within same organization, can be in another organization. The cost of moving those workers within that particular unit to another unit. In some organization, the remuneration or the wage of those that work in Department A and Department B, their wage varies, isn't it? Their wage do varies in some organization, depending on how technical the tax will be. So where you are moving workers from a particular unit to another, or from one particular organization to another where they are being outsourced, the relevant costs will be the costs you are paying them, the labor rates or labor value you are paying them, plus the loss of value in the other departments. The loss of value in the other departments that they are supposed to accrue to the other department, but is not being accrued, will be the relevant cost. The loss contribution plus the labor cost, plus the labor cost. But depending on the question, that is why I made it clear that at the beginning of the class, English language is very important. So we're going to see this play out in some examples. Then we'll see the practicality of it. So in labor, you can have a case of spare capacity. When you have spare capacity, the question will not tell you spare capacity. The question will want you to do some simple calculation that you have 50 workers, but only 20 are engaged. It means that 30 are idle. You have 30 spare capacity. So the relevant cost of the spare capacity is what? Will be nil. Now, when it comes to the issue of fixed overhead or fixed cost, fixed costs are sunk costs. They are past costs. As accountants, you record fixed costs, you value them based on historical value, even though when you apply your depreciation, you have your net book value. But in relevant cost, the value of fixed cost is not relevant because it's already there. It does not affect our decision, the decision we are to make as at now. Either we make the decision or not, you will still incur the cost. So fixed overhead costs, they are usually not relevant, except where they are incremental in nature. So the rule is when you see fixed overhead in the question, you ignore. It's not everything you see in the question that you make use of. So once the fixed cost is not incremental in nature, you ignore, because the fixed cost is already incurred and it does not change. So it does not affect your decision as at today. So except where it is what? It is an extra fixed cost that will result as a result of the decision you want to take now. So when it is extra fixed cost, that extra will be relevant. So only the increment should be recognized as being relevant to the decision you want to take. So you can have a case of variable overhead. Variable overhead. I think I have a diagram to show. Let's see. Okay. There is none. You can have a case of variable overhead. So variable overhead always varies with activity. It varies with activity. So you agree that variable overhead will be a relevant cost. Because the variable cost per unit or per hour will vary based on the decision on the quantity you want to produce. So always include variable overhead costs as part of what? As part of relevant costs based on what the question is saying at that point in time. Because the variable overhead cost changes with decision. It changes with decision. Let's look at this example. Let's look at this example on the issue of material before we move to the issue of labor. Now, this is a question: materials and relevant costs, that a company is considering whether to agree to do a job for a customer. It has sufficient spare capacity to take on this job. To do the job, 3 different direct materials will be required: material X, material Y, and material Z. Data relating to this material is as follows. Quantity needed for the job. You have material X, Y, Z. Quantity needed for material X is what? Is 800 units. Quantity currently held as inventory, 200. Original cost of units, that is the historical cost, is what? 20 naira. The current purchase price, if I want to buy it in the market now, is what? 23. Current disposal value, that is the net realizable value. If I want to dispose it based on scrap value, it will be 22 naira per unit. That is for X. For Y, same, and for Z, same, in that order. Now, material X is regularly used. Material X is regularly used by the company for other work. Material X is regularly used by the company for other work. Now, based on what we've explained, what will be the relevant cost of material X? What will be the relevant cost of material X? Material X is regularly used. I laid emphasis on regularly. Replacement cost. That is the current purchase price. Now, somebody will say replacement cost. Now, this replacement cost of 23 naira will be in relation to what quantity?
800.
Why 800?
No. It's 200, sir, not 800.
So it's 800 because it's currently
It's 800, sir, because it's the quantity needed for the job.
Okay.
But the
So now-
quantity we are having in inventory is 200.
Yes, we are going to replace the 200 too after using it because it's regularly in use.
Okay.
All right. I like what I'm hearing. I want that to happen so that you'll be able to understand it very well. Now, I explained that when a material is in regular use, if you play back this video, you hear where I say that the fact that you have certain quantity in store does not mean you will not buy the whole of what you need for the production at that particular point in time. Because is in regular use. This 200 that you have in store as of today, before you start this production, you might have exhausted the 200. So it means that you ignore what is in store and face what you need, the quantity you need to produce the order you've received. Because before you start this order, as you are leaving the store, Department B is already requesting for 50 out of this. If you are now hoping on this 200, saying that, okay, I have 200, let me get 600. Before you come back, you don't have 200 again. So does it mean you start running back to the market? No. Since it's in regular use, you work based on the quantity you've budgeted for a particular production. So the relevant cost of 23 naira will be multiplied by what? By 800 units. Because it is what? In regular use. In regular use. In regular use. Is that clear, please?
Yes, sir.
Material Y. Let's see this story. Material Y is no longer in regular use. Material Y is no longer in regular use. And the unit currently held as inventory have no alternative use. The units currently held as inventory have no alternative use. Once you see this statement in the question, have no alternative use, just know that it's either you are having an opportunity cost where the products can be used, but in this case, have no alternative use. It means if you are not using the available material, 400 units in the store for this production, what will happen? If you are not using it, what will be the other option?
Dispose it.
If you are for this production, what will be the next option? Are you going to sell it? Are you going to just think? Tell me something.
You dispose it.
We dispose it.
Fine. You dispose it. You dispose it. Yes. So please, everybody in this class, just understand it. Once you see this statement, material Y is no longer in regular use. The units currently held as inventory have no alternative use. What is that unit currently held as inventory? 400 units. If you are not using it for this production, what is the opportunity cost?
Cost
If you are
of
using,
disposal.
yes. So if you are using it let me rephrase my statement. If you are using it for this production, what is the opportunity cost? What are you forfeiting? It means you won't sell it, isn't it?
Yes, sir.
It means you won't sell it. You won't sell it. But if you are now using it for this production, if you are not using it for this production, what will happen? You will sell it. You dispose. So, how many quantity do we need? 600. Yes, 600. Fine. But in this scenario, you look at the opportunity cost of what you have, then the current price of the extra needed. Now, you have 400 in store, right? How many units do you need more to make 600?
200.
200.
Fine, 200. That unit you have in store of 400, the relevant cost is the opportunity cost. The relevant cost is the opportunity cost. That is, if you are using it in this production, what are you losing? If you are using the 400 in this production, what are you losing? The disposal, the cost of disposal. That cost of disposal is the relevant cost of 400 units plus what will be the current price of 200, the relevant cost of 200 units.
It's 19 naira.
Why is it 19 naira?
Because
19
the
times.
current purchase price.
Very good, because it's the current purchase price. So please take note. When you see a question like this, material Y is no longer in regular use, and the unit currently held as inventory have no alternative use, you have two forms of relevant cost. Two relevant costs. The quantity you have in stock, what is the opportunity cost? Then the extra units required to make up the quantity needed, what is the current purchase price? So the relevant cost will be split into two. The unit you have that is no longer in regular use, and if not used for this production, have no alternative use. What is the opportunity cost? If you are using it for this production, what are you losing? The disposal value. The remaining 200, how much will you get it in the market? 19 naira. So when you put this together, 400 multiplied by 12, which is the opportunity cost, you have the relevant cost for 400 units. 200 units multiplied by 19 naira, which is the current purchase price of 200 units. You have the relevant cost. So you can see how it plays out. I don't know if it is clear, please. Is this clear? Because you must know this thing this night.
Yes, sir.
Yes. Because I've studied this topic. Yes. Yesterday I was on a trip. When I arrived, I have to look at my slide again and look at the topic again. Yes. And see how well I can present it. So it's a topic that everybody should know and play with. Yes. It's a topic that you should know. It's just once you understand the terminologies, you'll be fine. You don't have any issue. So material. We are going to solve it. We're just using mouth to explain. It's not just by writing. So material Z is also no longer in regular use. Is also no longer in regular use. But if the existing inventory of the material is not used for this job, you can see another dimension. They can be used as a substitute material on a different job. Where the contribution would be 25 naira per unit of material Z used. Okay, this is nice. Now, the quantity of material Z we have in store is how many units?
300 units.
Now, if we use this 300 units to meet up with our current production, what are we losing?
The opportunity cost of 25 naira.
Very good, very good. That is just the concept. Because if we have a substitute for it. Now, if we are to use it for this our production and not use it for the substitute, we are going to lose 25. But if we are to use it for the substitute, we are going to get a contribution of 25. But since we want to use it for this particular production, we are not going to get 25. So the opportunity cost of 300 will be the 25 naira per unit that you are. The 25 naira per unit that you are not getting will be the relevant cost for 300 units that you have in stock. Now, you need how many units of material Z?
500.
500.
The remaining 200, what will happen to it?
It will be at the current price.
Purchase it and will be at the current price.
Of 40 naira.
9.
40 naira. They are not far from all this. Are not far from all this. Yes. Before I posted them, me too I've studied them. Yes, I studied the questions. I didn't just go and look for a question and start sending. I look at it. That okay, if we are to look at this example, will the student be able to solve this question? Yes. So let's present it, because there is one question that I have one page, and after looking, I discovered the solution is just about 6 lines. But when you see it, you put your hand on your head. What will I do?
Mr. Tokpe. Good evening.
So just read it and come up with fast. Yeah. So let's see. Let's see what's. So solution. 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 Can have relevant costs. Relevant costs. Now for material X. For material X, the question says that what? Material X is regularly used by the company for other work. So the quantity needed for this particular job is what? 800 units. The relevant cost will be what? Will be 800 units. 800 units multiplied by what? What is the current purchase price?
23.
20 naira.
23 naira. So the relevant cost when you multiply will be what?
18,400.
And we have material Y. Material Y to be split into two because material Y is no longer in regular use, and the units currently held as inventory have no alternative use. So the units currently held as inventory is 400 units. Now, if we are using it for this particular production, what is the opportunity cost? The opportunity cost will be the disposal value. So material Y, the opportunity cost of unit in inventory will be what? Opportunity cost of units in inventory.
25.
In inventory is equal to what? Disposal value. Disposal value. Now, the unit in inventory is what? 400 units. Multiplied by what? The disposal value is what? 12.
19 naira. Okay, so 12.
12 naira. 12 naira. When you multiply, you have what?
1,800.
1,800. The order balance required, because you need 600, you've analyzed the relevant cost of 400 units in stock. You need a balance of 200 units. So you need to purchase what? The relevant cost of the additional purchase will be what? Purchase costs of additional units. Of additional units will be what? 200 units multiplied by what? What is the current market price? The current market price is 19.
19 naira.
19 naira. 19 naira. Now, when you multiply, you have it as what?
3,800.
When you add the relevant cost of material Y will be what?
86.
Plus 4. 86.
8,600. The next is material Z. Material Z. Let's go to the question. That's material Z is also no longer in regular use, but if the existing inventory of the material is not used for this job, they can be used as a substitute material on a different job, where the contribution will be 25 naira per unit of material Z use. So the opportunity cost of unit in inventory will be what? Opportunity cost of units in inventory will be what? Yes, based on the explanations.
25 naira.
is 300 units multiplied by what? Multiplied by 25 naira. And this will give us what? 7,500. 7,500. How many do we need? 500. We've ascertained the relevant cost for 300 units. The remaining 200 units, the relevant cost will be what?
Current market price, 14 naira.
So purchase cost. Purchase cost of additional units. Additional unit is 200 units multiplied by what? 40. Yeah. The cost will be what? And you add what will be your result. And you add this should be 15,000. So your total relevant cost of material will now be what? And you add everything.
That's 2,500.
Total relevant cost. Total relevant cost of material. $42,500 naira. 42,500 naira. So the essence of this relevant cost is for you to know the revenue to expect. If you are arriving at 42,500 as the overall cost to make a product, to produce a good, what should be your expected revenue? If your customer is giving you a price less than 42,500, it means you have to reject. You are not to accept the offer because you are out to make profit. So that is the essence of relevant cost. Some organizations don't work with relevant costs. They just work haphazardly without looking at some of these concepts and how it will help them retain and keep their customers in business. So the essence of relevant cost is not just for examples. It is a concept that can be applied in our daily life. Yes, in our daily life. That's what is the cost relevant to a decision you want to take now? What are the costs associated with it? Some costs might have been incurred, but they are not relevant because they are past costs. They are past costs. So that is one of the concepts of why relevant cost is important. Let's look at another example. But before we go ahead, any question from this example? Okay, fine. Maybe since there is no question, you help me solve the other one. Here's the question now. All right, this is the question.
Please, sir, last time. I want to screenshot. I'm sorry, sir.
Let me adjust it.
Done. Thanks, sir.
So this is another example. that a customer is willing to pay 22,000 naira for a special job. The job required the following material. KG required for the job, in stock, historical cost, net realizable value, replacement cost. We have for material A, the job required 1,000 kg. We don't have the historical cost, we don't have net realizable value, but we have replacement cost. For material B, the job required 1,000 kg. We have existing material in stock, 600 kg, historical cost 2 naira, and net realizable cost also 2.5 in that order. Then replacement cost likewise. Then C, we have 1,000 kg required. How many do we have? 700 kg. Historical cost 300. Net realizable value, replacement cost. And D, we need 200 and we have 200 in stock. Historical costs 4. The question is, material B is in regular use for every other job. Material B is in regular use for every other job. Every other job is in regular use for every excuse me, please. So that's material B is in regular use for every other job. For every other job. For every other job. Now, looking at this question, what would be the relevant cost of material B? What would be the relevant cost of material B?
In stock of 600 kg.
Material B is in regular use for every other job.
Replacement cost.
It's 1,000 kilograms.
3,000.
It's 1,000 kilograms.
Yes, 1,000 kilogram. But what will be the relevant cost?
The replacement cost.
So the replacement cost multiplied by what is required will give you what?
3,000.
3,000. 3,000. $3,000. $3,000. So now, I know somebody is saying, why did he skip A? I'm coming back to A. So the relevant cost for B is what? You require 1,000 kg. Now, since the statement is saying material B is in regular use for every other job, it means you don't need to look at what you have in store, because any other person, any other department can go and use it.
What's the problem?
So you use what is required for this particular job. 1,000 kg multiplied by what? The replacement cost, which is 3 naira. 3 naira by 1,000 kg. You have what? you have 3,000 naira. Material C and D. Material C and D are in stock due to overbuying. It means you have them too much in your store because you didn't plan how to buy. You're just buying. So there is no other use for material C. There is no other use for material C. What will happen here?
I think the 798 material
We
is going
discuss it, sir.
to be the net realizable value 5. Then the remaining 300 will be at 4 naira replacement cost.
Yeah, that is very good. That is it. That is it. That is it. So that material C and D are in stock due to overbuying. There is no other use for material C. It means if we are not using material C for this particular production, what will be the other option? Is to sell. At what value? The net realizable value. So it means 700 kg multiplied by what? 2.5. That is the opportunity cost of not using it, or of using it in this particular production. What you have forgotten, the sacrifice you are making. So the remaining 300 will be at what?
Current price.
Current price, the replacement cost of 4 naira. 4 naira. 4 naira. So for material D, the material C and D are in stock due to buying. There is no other use for material C. So material D can be used to substitute for 300 units of material E. Can be used for substitute of 300 units of material E. It means instead of going out to buy material E, 200 units of material D can perform the function that 300 units of material E will perform. And material E is not in stock. Material E is currently costs 5 naira. Currently costs 5 naira. What will happen in this case? What will happen in this case? What will happen in this case? In this case, you look at two options. You know, there are two options.
Yeah, can I call you back? Let me download the app first. Hello, the app is downloading. Can I call you back?
There are two options. Material D, if we decide not to use it in this particular contract, what will happen to 200 kg? What will happen to 200 kg?
To be a substitute for material
For material E, right? Yes. So if we decide not to use it, we can dispose it at what value? We can dispose it at what value?
6 naira.
Yes, we can dispose 200 kg at what? At 6 naira, the net realizable value. Now, if we decide not to dispose it and use it to perform the function that material E will perform, how much are we going to save? how much are we going to
1,005.
save? No,
One
how are we going to save 4,500? How are we going to save 4,500?
9 minus 5. I don't understand the
It's
explanation.
100.
Material D can be used as a substitute for material E. Now, material E, you need 300 units. But instead of going to the market to get 300 units of material E, you have material D that can be a substitute for 300 units. The question is, when you go to the market, how much will you buy 300 units?
It's
5
9
naira.
9 naira.
Material E currently costs 5 naira.
It should be 1,500. 1,500.
So 5 multiplied by 300 units. When you go to the
Okay.
market, how much are you spending?
Okay.
You spend 1,500.
It's
1,500.
1,500, sir.
Good, you spend 1,500. Now, if you decide to sell it at net realizable value, that is this 200 kg at net realizable value, how much are you going to get?
1,200.
So between 1,500 and 1,200, which is better?
1,500 is high.
1,500 is better. 1,500 is better because instead of you going to spend 1,500 in the market, instead of you going to spend 1,500 in the market, the reverse is the case. You won't spend that 1,500 in the market. You won't go to the market to spend that 1,500. You won't go to the market to spend that 1,500. So it's better. What is the better opportunity cost? The better opportunity cost is what? Is 1,500. Is 1,500. So instead of buying it at 1,500 outside, you are saving that 1,500. You are using that 1,500 as the cost. You are saving it. You are saving it. So when we have issue of opportunity cost, the higher benefits, the best benefit is what we are to choose. Is what we are to choose. So using material D for this contract means you are giving up the best alternative use. If you decide to use it for this contract, you are giving up the best alternative use. So the two alternative is that you sell D, that is 200 by 6, you have 1,200. The option 2 is that you use D instead of buying what? E elsewhere. So if 200 kg of D can replace 300 units of E, what will happen? So it means 300 multiplied by 5. You have what? You have 1,500.
1,500.
So between 1,500 and 1,200, which is the higher opportunity cost?
1,500.
So the relevant cost for material D will be what? Will be 1,500. Will be 1,500. Yes, sir. What is your question, sir?
Okay, so it's about the choice between that net realizable value and replacement cost, because now material D is in stock because of overbuying. So does it mean that it doesn't have another use?
Yes, from the question, we read that material D can be used to substitute for what? 300 units of material E, which is not in stock. Material E is not in stock. So Material E currently costs 5 naira. So once we see a statement in this order, have no alternative use, can be used for this to get a contribution of this, what we are to be looking at is what are those alternatives? Those alternatives that we can use the materials for. So the alternative, the relevant cost associated with those alternatives is what we are to consider. What we have to consider. So when we have more than 2 alternative use, the higher of the 2 alternatives will come as the relevant costs. I don't know if I answer your question, sir.
Okay, sir. Yes, thank you, sir.
All right. Yes, Madam Macaulay.
Okay, good evening, sir.
Good evening, ma'am.
Please, sir, the question I'm having is still on that. I'm not still understanding because we are talking of costs here. We are not talking of contribution or profits. Why did we decide to take the highest instead of taking the 1,002 in order to minimize?
Now, sir, ma, you going to the market to pay 1,500 and getting and receiving 1,200, which is better? Which is better, ma? You have a
me
business.
going to pay 1,500 and receiving 1,200.
When you receive that 1,200 and you still run back to the market to buy material E for 1,500, which is better?
Okay, receiving 1,200.
No, you receive 1,200 now, ma'am, and you discover that there is a need for you to get a stock that is worth 1,500. That is worth 1,500 in the market. Now, instead of you receiving the 1,200, you discover that you have a product in your store that can serve the purpose of going to the market to pay 1,500 for. What will you do?
I will use the one in stock.
Yes. So what is the market value of that one in stock?
Okay. It's 1,500. I understand now.
So getting 1,500, going to the market to pay 1,500 and collecting 1,200 from selling the product, which is better?
So the 1,500 is better.
Yes. So it's a technical issue. I understand. Yes, it's something that somebody should ask questions about because it's technical. Yes. But once you can break down the technicality, you will dance on questions on relevant costs. So that is why you see issue of relevant cost, transfer pricing. You must read the rules that guides them. Once you know the rules, you appreciate this topic and you'll be able to raise your head high on this topic because there are rules that once you know them, you feel okay and you'll be ready to receive questions on this topic any day, anytime. Yes, Madam Esther.
Good evening, sir. I'm so sorry to draw you back. How did we get that 1,200? I understand how we got 1,500 and how we went about it. But the 1,200, I don't know how. Okay.
Now, if material D is not used for this product, you can either sell it at net realizable value. The net realizable value per unit is what? 6 naira. 6 multiplied by 200 kg will give you what?
Okay.
So
it's 1,200, sir.
All right, ma. So let's go to our ICANN Pathfinder. I have another question here, but I will not solve it. I think It's better I give it as additional, so that we'll see the issue of labor and overhead, how it is being treated. We'll see the issue of
Yes,
labor.
sir.
I can hear you, man.
Have you solved this one? Did you write it?
Okay. I didn't write it though.
Okay, I just want to know. Okay.
Okay, I didn't write it. Let me write
Okay,
it.
sir.
Let's write it. Let's write it. So the material A, since we don't have issues of historical costs, it means that will be the first time we are to obtain it. And that is why we're just having the issue of replacement costs, the current value. So it means we need to get it. Yes, being the first time. So it means it's a material that will just be purchased, So let's show it. The relevant cost. Relevant cost, material A, we have it as what? 1000 kg. 1000 kg. The replacement value is what? 6 naira. Overall, this will be what? 6,000. And we have material B. Material B. It is in regular use, 1000 kg. 1000 kg. The replacement value is 3 naira. This will have it as 3,000. Material C. Material C. We have a split here. 700 kg is in stock, and relevant cost related to this is 2.5. Explained already. 2.5 in relation to 700 kg. We have 1,750. We have material. Okay, this is split into two. Because it's 1,000. So 300 kg multiplied by the replacement cost in the market is 4 naira. We multiply this, we have 1,200 naira. And for material D, we have a comparison based on the workings. For the higher, the best opportunity cost will be 300 kg. That's if you go to the market to buy, you will incur 5 naira. 5 naira by 300 kg. You have the relevant cost to be 1,500. So in total, what would be your relevant cost? In total relevant cost. What would be the relevant cost in total? The relevant cost in total will be what?
13,050 naira.
Okay, 13,000. 13,000 and what?
50 naira.
13,450.
Okay, 13,450. 13,450. I forwarded a question on see I can PM. Okay. The first question in the group, Hades Nigeria Limited. Let me locate it on my system. Hades Nigeria Limited. If you are there, you can read. Hades Nigeria Limited. If you are there, you can read. As I try to
FedEx
do.
Nigeria Limited.
TEDx Nigeria Limited is an engineering company that specializes in holding engineers for grinding machine.
In building engines.
Okay. One of the components for building these engines is sourced from Toka Nigeria Limited, a company in the same group with Stadex Nigeria Limited. Each component is being transferred to Tadex, taking account of Toka's opportunity cost of the component. The variable cost of Toka is 280 naira per component. A prospective customer has approached Tadex to submit a quotation for a contract to build a new engine. This is a new customer to Tadex, but directors of Tadex are keen to winning this contract as they believe that this may lead to more contracts in the future. As a result of this, they intended pricing the contracts using relevant costs. The following cost data is given in respect of the contract. The production director of TEDx is on an annual salary equivalent to 15,000 per 8 hour per day. 2. The materials needed for the contracts are 110 square meters for material A. This material is normally being used by TEDx and it has 200 square meters in stock. These were bought at a cost of 120 naira per square meter. They have resale value of 105 naira per square meter, and replacement cost is 125 naira per square meter. 2. 30 liters of material B. This material has to be purchased specifically for this contract, and the minimum order quantity from the supplier is 40 liters at a cost of 90 naira per liter. TEDx has no use for this material after the contract is executed. 60 components will be purchased from Toka at a purchase price of 500 naira per component. 3. A total of 240 direct labor hours will be required. The current wage rate for the grade of labor that will work on the contract is 110 naira per hour. TEDx currently has 75 direct labor hours to spare capacity for this grade and are being paid under collective wages agreement. The additional hours required will be sourced by either 1. Overtime at a cost of 140 naira per hour, or employment of temporary staff at a cost of 120 naira per hour. But this temporary staff, because they are not experienced, will require 10 hours supervision by existing supervisor, who would be paid overtime at a rate of 180 naira per hour for this contract. 4. 25 machine hours will be required. The machine to be used is already leased at a weekly lease rental of 6,000 naira. It has 40 hours per week capacity. The machine has sufficient available capacity to complete the contract. The variable cost of running the machine is 70 naira per hour. And then 5. The company fixed overhead absorption rate is 200 naira per direct labor hour. You are required to A. Calculate the relevant cost of building the new engine and explain why you have included or excluded any costs in your calculations. B. Discuss the factors that would be considered to TOCA to determine the opportunity cost of the equipment. 15 marks, 5 marks, 20 marks,
All right,
Thank you.
thank you very much. All right. So looking at this question, what do you think you can do about it? Let's assume we are seeing this in the exam hall now. Based on the knowledge we have, you can read again and tell us what you think you can come up with. Yes, the essence of this class is to build your confidence, yes, towards the exams. So saying this, you don't need to get scared of anything. Yes, just develop that confidence. Read where you don't understand, read again. But be very fast in reading, and then see what you can come up with. So who can just tell us one or two things about this question? Yes, can you tell us about this question? Oh, you are still reading. We are still reading.
Hello, sir.
Yes, ma'am.
The production director's salary, that is
Yes.
irrelevant cost because it is a fixed cost.
Okay, very good. You have 1 mark.
Then the material needed for the contract are the first one, the second one. It said the material is normally being used by TADEX and it has 20 square meters in stock. The one that is needed is 110. So these were bought at the cost of 120 per square meter. Yeah, resale value. So we have to use the replacement cost for that 110.
Okay.
We will take it from the stock of 200. We take the 110 from there, and at the cost of 125, that is the replacement cost. Now let me rest. But you can continue from there.
Yeah, somebody else should continue. You've done a good job.
Thank you, sir.
Yes. Yes, Madam Mineka.
Sir, for material B, since they said that they purchase that they have 40 liters at a cost of 19 naira per liter. and is their minimum order quantity, even though they need only 30 liters. So I think the 40 liters should be purchased at the cost of 90 naira.
Yes, that is very good. Yes, let's march on. Yes, you're correct. Is that the only thing you want to share with
Should
us?
I
Continue.
Okay, for the labor.
Wait, don't go yet. For the material, is that all for material?
No.
Okay, so the other components that is 60.
Very
The
good.
60, yes, you multiply by 500.
Yes, that is fine.
So for the labor, you have to remove the 75 naira, the 75 that is, because there is spare capacity.
Very well. They are idle. They are just roaming about.
Yes. So you remove the 75 because they say that there is 75 that can take care of the job. Then the remaining one, that's 165, should not be multiplied by
110.
Multiply by what?
140.
Okay, fine. Yes, let's march on.
So for the machine hours, the machine hours will now be 25 times 70.
Wait, on that labor, don't go yet. There's more stories about labor, right?
Yes.
Sir?
There is more story about that labor.
Okay.
We only analyze one. There is some other aspects.
Okay. So we are going to choose. So they say that they are going to employ they're going to employ
Temporary staff.
overtime, or they will ask a supervisor to supervise them at the cost of 180, and those laborers are inexperienced, they will pay them 120. So we'll choose the lower cost. So we're going to choose the lower cost because 120 plus additional 180 that will pay the supervisor is going to be a lot of cost. So we'll just pay the laborers over time of is it 140? Yes.
You are paying your workers 180 naira per hour because they will spend 10 hours in supervising those people you will employ, those temporary staff. They are not skilled. So you need somebody to supervise them. So the supervisors will work 10 hours and you pay them 180 naira per hour. Do you understand?
Yes, sir.
You've tried. So
Thank you, sir.
let's now go over it again. You can see it's very straightforward, but you can see the paragraphs. You can see the stories. So once you see question on relevant course, get your full mark without any delay. Without any delay. So that Thaddeus Nigeria Limited is an engineering company that specializes in building engines for grinding machines. One of the components for building these engines is sourced from Toka Nigeria Limited, a company in the same group with Thaddeus Nigeria Limited. Each component is being transferred to Thaddeus, taking account of Toka's opportunity cost of the component. Variable cost of Toka is 200. A prospective customer has approached Thaddeus to submit a petition for a contract to build a new engine. This is a new customer to Thaddeus, but directors of Thaddeus are keen on winning this contract as they believe that this may lead to more contracts in the future. As a result of this, they intend pricing the contract using relevant cost. The following cost data is given in respect of the contract. The production director of Thaddeus is on annual salary equivalent to 15,000 naira for 8 hours per day. Now, this annual salary, is it a relevant cost or not relevant?
It's not relevant, sir.
It's not
Not
relevant.
relevant.
So in your book, write solution. Write solution. Except you want me to change my screen because they're on different platform. Okay, let me come here. So solution, you write solution, relevant costs, relevant costs, match, relevant costs. So the production director's salary, you can choose not to write it, you understand, but because as I'm putting it, I'll just put nil. Production director's salary, because it's not relevant. Not relevant. So you can just have it as nil. As nil. Then the next from the question is what? From the question that materials needed for the contract are 110 square meters of material A is needed. This material is normally being used, that is in regular use by traders, and in store they have 200 square meters. So the fact that it's stated clearly that it's in regular use, we don't have any business with what is in the store, because before we even commence production, these 200 might have been exhausted. So let's work by what we need for this particular demand. So 110, and since it's in regular use, the replacement cost would be what? 125 square meters.
25 million.
Square meters. So 125 multiplied by 110 that you need, we give you what?
13,750.
So you have it as material A. Material A. The relevant cost value will be what? 110 multiplied by what? 125. So the value will be what?
13,750.
13,750. The next from the question that 30 liters of material B is needed. This material has to be purchased specially for this contract. It means we don't have it, but because of this contract, we just have to go to the market to get it. And for us to get it, the people selling it will not sell below certain amounts. They will not sell below the minimum they can give is 40. The fact that we need 30, when we go to them, they will tell you, no, this thing is packed in 40, based on 40 liters. We can't give you less than 40. So the minimum we can give is 40. So because you need to get it, what will you do? You need to buy the minimum order, which is 40 liters. These 40 liters, at what cost? At
19 naira.
19 naira. Now, before I change my slide, the other component, this material B is 1, because as you are reading, you can decide to ignore this other aspect, that Thales has no use for this material after the contract is executed, full stop, 60 components will be purchased. This is another statement. 60 components will be purchased from Tokas at a purchase price of what? Of 500 naira. This one, there is no issue. We just need it. So it's a straightforward computation in this regard. So yeah, sorry. I'm back. Back. All right. Sorry about the network. So from the question, material B 40 multiplied by 90, we have 3,600. The other component is what? The other component,
60 components multiplied by 500.
other components, that is 60 multiplied by 500. So these will be what here?
30,000. 45,000.
Okay. So now, the next from the question is what? Yes, ma. What is your question, ma?
Yes, sir. Well done, sir. So my question is the 30 liters of material B. Since we are purchasing all that they have from the supplier, the 40 liters.
Yes,
What
ma.
about the 30 liters of the material B that has to be purchased? Are we not supposed to remove it from the 40 liters? We have 10 left.
No. For you to get 30, what will you do first, ma?
Buy it first.
For you to get 30, the prerequisite to getting 30 is that the ceiling is 40. You must first get 40 before you can now say you are now having excess of 10 in your warehouse. So the supplier is telling you that we cannot give you anything less than 40. It is by compulsion that we are getting this 40. The fact that we don't need 10, but the supplier cannot give us 30 liters. So when we go to the market, how much are we paying? So that we can use the 30 that we need. First, you must pay for what? For 40 liters. you must pay for 40 liters, even though what we need is 30. But before you can get 30, you have to pay for 40 liters. You have
The
to pay
remaining
for
10, the remaining 10, is it not in excess?
yes, it's in excess. But before you have to pay for 40 before you can get the excess. It's in excess, you don't need it. But there is no any statement regarding you disposing the remaining 10. There is no any statement regarding the net realizable. Or do we have that in the question?
No, sir.
There is no statement regarding that. So the relevant cost is how much are you buying the 40? The 40 liters that is needed. So where the question moves further, that the remaining 10 can be used for this, for that, then you can now begin to see how to factor in the 10 liters that is left now.
Okay, sir. Thank you, sir.
Okay, so now I think that is that for material. For labor, that a total of 240,000 direct labor hours will be required. The current wage rate for the grade of labor that will work on the contract is 110 naira. 110 naira per hour. FedEx currently has 75 direct labor hours of spare capacity. It means we have 75 hours that is free. It means we are not paying for these free hours. These free hours are there. So their relevant cost is zero. So how many hours will be relevant to this?
165.
165. That is 240 minus what? 75. 240 minus 75. 240 minus 75. So is what you need to account for, is what will be relevant to this production. What will be relevant to this production? So Thaddeus currently has 75 direct labor hours of spare capacity for this grade and are being paid under collective wage agreement. It means their payment is fixed. The additional hours required will be sourced by either one overtime at a cost of what? At a cost 140. So if we are to engage overtime, how much are we going to pay overall on 165 labor hours? We have to engage overtime.
23,100.
Fine. Now, the other option is to employ temporary staff. If we are employing temporary staff, we'll pay them 120 naira per hour. Now, if you should employ these temporary staff, your supervisors will still have to check what they are doing. And in supervising these temporary staff, they will require 10 hours for the supervision. And for this 10 hours of supervision, per hour, you have to pay them 180 naira per hour. So if you engage temporary staff for 165 hours and you are paying them 120 naira per hour, how much will you pay overall?
19,800.
19,800 plus the supervision cost. Supervision cost will be what?
1,800.
So 19,800 plus 180. 19,800 plus 180 will give you what?
21,600.
So when you compare overtime cost and the employment of temporary staff, which is better?
Over the time.
The employment of temporary staff.
Employment of temporary staff.
You spend less.
Overtime was 23,000,
Yes.
while employment of temporary staff is 21,000.
21,600.
Yes, you spend less. You spend less. So you go for what? For the
The laser.
employment of temporary staff. You go for the employment of temporary staff. Employment of temporary staff. Let's look at the next one before I go to the solution page. That 25 machine hours will be required. 25 machine hours will be required. The machine to be used is already leased at a weekly lease rental of what? Of 6,000. It has 40 hours per week capacity. The machine has sufficient available capacity to complete the contract. The variable cost of running the machine is 17 naira per hour. In relation to this, what would be the relevant cost?
The variable cost.
Variable cost, fine. In relation to what? To the hours.
That's 17 naira times 40 hours.
70 by 40. Check it again. How many hours do you need? Read from the beginning.
25 machine hours will be required.
25 machine hours. This is what you need. Though the machine that you have in your factory can work for 40 hours. That is not your business. It's a spare capacity. Yes, but what's the hours you need? Is 25 machine hours. So for you to run this machine, the variable cost associated with these 25 machine hours is what? 70 naira per hour.
70 times 25.
70 times 25.
1,750.
750.
That is the relevant cost. Let's see the last one. The company's fixed overhead absorption rate is...
Sir, Mr. Tope. Sorry, sir. Please, sir, the first one that they are talking of, the machine to be used is already leased at weekly lease rental. I think maybe that's supposed to be an income to the company or what?
No. The company leased it, borrowed it.
Okay.
It's a past cost. It's a committed cost.
Oh, thank you.
So the machine to be used is already leased at a weekly lease rental. You've already leased it.
It's sunk cost.
So now, I think that is that for this. So the company's fixed overhead absorption rate is 200 naira per direct labor hour. What is the interpretation of this? Is this a relevant cost?
It's not, sir.
It's an irrelevant
fixed element.
Yes, it is not relevant. It is not relevant. Is this question, is it difficult?
No.
Excuse me, sir.
No, sir.
Yes.
I don't understand the IV. The number IV.
What did you tell me what you don't understand there?
Oh, not that one. The one of labor, the employment of temporary staff. I don't really get it.
Tell me what you don't get so that I will know where to start from.
I don't understand how we chose the supervisor. The cost of paying the supervisor 180 instead of the overtime. Like, I don't understand it.
If you look at this value, this statement here, this Roman 3 here, you have two options: either to work overtime or to employ temporary staff. Now, as a cost analyst, you are expected to choose the cost that is lower, the cheaper value. If you employ overtime, how many hours do you need? Let me ask you. How many hours do you need?
23,100.
You said
23, 23. That's 165 hours. 165 hours.
better. Hey, just hold it there. 165 hours. You need 165 hours, isn't it? So
Yes, sir.
if you are employing overtime and you are paying 140 naira per hour, how much will be the total cost of labor?
23,100.
That is one. That is one option. Put it one side. The other option is what? Employment of temporary staff. When you employ temporary staff, because they are not permanent, you are paying them how much per hour?
120 per hour.
Fine. In relation to this temporary staff matter, you need people to supervise them. And those that will supervise them will tell you that, madam, you will drop something. No? What are you dropping? What is that thing you are giving them extra for them to supervise for 10 hours? How much will you pay them per hour? Tell me.
180.
80.
180 multiplied by 10
1,008.
plus the amount you are paying the temporary staff.
Okay, I understand.
Okay, thank you, ma'am. So I was asking, is this question difficult? It's not. But it will be difficult if you don't know the concept. In fact, you even feel headache and say, what is this? So this is one. There is one aspect I will also show, though I will not solve the question, but there is one statement that you can always see in a question of relevant cost that can cause confusion. Let me go to that aspect. Let me go to a question that have that aspect. Can always cause confusion. Let me explain that. For example, you have a stock in your warehouse. You have a stock in your warehouse. You don't need it anymore. And if you continue to keep the material, it can be harmful. It can be harmful. But should in case you use it in a production process, you will save yourself certain cost. The point is, if you don't use it in the production process, you have to call those that will help you to dispose it. It's not that you are selling it. You are not selling it because it's a harmful product, but you need to move it out of your warehouse. The cost of moving it out of your warehouse to a place where it will be discarded is something to look out for. Now, if you should use that product before it gets expired in a production process, it will save you the cost of disposing it. When I mean disposal now, I'm not talking about you selling it, but the cost of moving it to the place where it will be destroyed. Now, if you should use that product, you know, you save yourself cost of disposal, isn't it? You save the organization cost of disposal. But if you don't use it, the product will have to be disposed. Then you incur the cost of disposal. The cost you are incurring will be an addition. But if you should use it, you will not incur that cost. It means there will be cost savings. There will be cost savings. So when there is cost savings in relevant cost, what will happen? That is the subject matter. When there is cost savings in relevant cost, what will happen? Are you going to still add it to the cost or less it to the cost? That is the question I want to bring up.
Less it.
You will
You
less it.
less it.
You will less it. Yes, that is very good. You will less it. It's cost savings because you won't incur that cost. So it will be a minus. It will reduce your overall cost. To reduce your overall cost because you didn't incur that cost. So that can be a point of confusion when students see question. They can be saying, why are they adding? Why are they lessening this value? It's because it's cost savings. It's cost savings. Let me show us an example. Let me present another thing to show us an example. Okay, yes, this is a question. This is a question. Let me see the points. Okay, fine. Look at material D. Material D. That there are 100 liters of this material in stock. It is dangerous if not used in this contract. It is dangerous if not used in this contract. It will have to be disposed of at a cost to Mr. Smith of $50 per liter. Can you see the English? It will have to be disposed of at a cost. It means it will cost Mr. Smith $50 per liter to dispose it. Because I remember last night, some people were adding it as a part of cost, but the English is it will have to be disposed of at a cost to Chioma. When it is disposed of at a cost to Chioma, it means Chioma is bearing the burden. Chioma is bearing the burden. Chioma will pay for the disposal. But where this product is used, Chioma will save the cost of 15 naira per liter. And when Chioma is saving the cost of 15 naira, it will reduce the cost, the overall cost of the production. So when you see a question like this, the portion that will be used is what you will account for. Is what you will account for. It means, let me go to the main question. Material D is material D. What the question or Mr. Smith need is 50 liters. But what is in the store is what? Is 100 liters. So if Mr. Smith should use 50 out of what is in the store, it means Mr. Smith will save how much? Mr. Smith will save how much? 50.
$4,000.
By the disposal cost.
Very good. Very good. Mr. Smith will save 50. Is it 50 naira now? Where is it? Okay. Mr. Smith will save material D. Will save 50 naira, $50 multiplied by 50. You know, Mr. Smith will use 50 out of these 100. Yeah, so 50 by 50. 50 by 50. Let me see what I have done here. Where is it? Yeah, material D. See it. 50 liters by 50. So it will reduce the cost. So instead of you incurring this cost as an outflow, as an expense, you are saving it. You are saving it because all we are considering here is cost. Is cost. Because this will be a savings. We have to less it from this. You can decide not to include it, but for mathematics purpose and for the examiner's purpose to understand that you understand the concept, you have to show it as a reduction in the cost, because instead of you spending 2.5, you won't spend the 2.5. You will rather save it. You will rather save it. So this is another approach, another point they can come. And it's very important you understand this. That is why I have to say something about it. I think in the other questions I forwarded to the group, you might see an issue of this nature. So you see how to tackle it. Let's see how to tackle it. So you see those questions I forwarded. I know some people, it used to be very difficult for them to go to the Pathfinder to look for questions. So in order to save you the stress, I decided to post them, because some persons to open the Pathfinder is a big problem. So I can help you to search for questions. So there's still one more question I will send. The question was tested, I think, May 2025. May 2025, if I'm not mistaken, on relevant costing. So you can check that. You can check that and see what has played out there. Just take your time, follow it gradually. All we've discussed tonight, before you go ahead to solve those questions, solve these again on your own. Interpret the words. Let it be part of you. Then when you go, you might make one or two mistakes. Does not mean you don't know it. You make those mistakes, go to the solution, see what has played out, solve it again, and you'll be better. So sometimes some of us think it's just magnets. I should just know it at once. No, there is a learning curve process. There's a learning process. So the learning process is in you practicing. As you practice, you get exposed to issues. You get exposed to issues. So please go back, solve all these again. I will forward this slide. You see this question you are seeing, I'll forward it as part of the slide. You see the solution, analyze it by yourself, then go to the solution and see what has played out. Then you appreciate the concept of relevant costing in a much better way. So class, thank you very much. Let me stop the recording before I say some other things.